Financial Secretary Paul Chan also said as the external economic situation continues to worsen, the city's exports and investment confidence will naturally be affected. However, he believes Hong Kong's economic performance will improve in the latter part of the year. Caleb Leung again.
As the Federal Reserve raised its benchmark interest rate and multiple European countries tightened their monetary policy to combat inflation, Financial Secretary Paul Chan believes the global economic outlook has clearly deteriorated. With the value of Hong Kong's June exports dropping 6.4% year-on-year, Chan expects the situation will continue to worsen.
With the increasing interest rate in the U.S. as well as many of the developed economies, the external economic situation will continue to worsen. So the export performance of Hong Kong will naturally be affected.
The government is forecasting a GDP growth of 1 to 2% for the year 2022, but Chen said the figure will unavoidably be lowered next month. However, he did offer some optimism for the second half of the year.
If the COVID situation is largely under control, private consumption with the launch of the second phase of the consumption voucher will have increased momentum in the second half of this year. So by and large, our assessment is that the economic performance of Hong Kong in the second half would be better than the first half.
The finance chief also dismissed concerns that the liquidity problems of mainland developers may affect the stability of Hong Kong's banking system.
For the mainland developers, they borrow from our banks, they have to provide collaterals. And the bank have been adopting a very prudent lending policies with regard to all these mainland developers.
He added that looking at the liquidity, capital adequacy, and classified loan ratio of the banking sector, the government believes mainland developers' financial difficulties would have a very limited impact on the banking stability of Hong Kong. Caleb Leung, TVB News.